Today, again, I am in my Instagram and Facebook pages with the topic accounting process. I have already told you accounting process is an ongoing process, is the lengthiest process. So it will take huge number of classes to reach at some standard, more or less standard state. So today, so far what I have said, I have gone through with the aspects of accounting process. Process is a set of functions. So there are good number of accounting functions which constitute the total process of accounting. And I have already told you repeatedly in each and every appearance, initially I told you that accounting starts with the happening of an event and those events which are of our concern. So as soon as any event takes place, I should judge first whether it is a transaction or not. If it is not a transaction, we should stop, we should allow that not to be considered, and if it is a transaction, then I would take proper attention to that. So the only transactions are given attention to. This, so identification of the transaction is the first function of accounting. And of the transaction, each and every aspect I told you, one aspect is debit and the other aspect is credit, and so we have to find out the debits and credits. Then after getting all this, we go on recording. First of all, we record daily basis, chronologically in a book of account, and that is known as journal. Journal, the word has come from the French word jour, Z-O-U-R, jour, means divas, day. So we record it in journal. It is known as making entry or journalizing, or it is a process of journalization. And then from journal, we finally record it in a set of books, and that is known as ledger book, ledger. And ledger is known as a book of final entry because the transactions are finally recorded over there. So from journal, we put it in ledger, so it is known as posting. Then ledger accounts have got two aspects, one is debit and the other is credit. Both sides are added, the amounts of both sides are added, that is known as totaling or casting, and there must be the difference between a debit and credit, and that difference is known as making the balances, so balancing. So after getting all this, we get a good number of ledger accounts. So good number of ledger accounts of the total transactions effected. Then my objective, then I want to get some assurance as to my works, whether the functions I have done so far, whether arithmetically correct or not. In order to do that, I will summarize all the statements. They are debit balances and credit balances. They will be grouped into two debit groups and credit groups, and if both the groups are agreed and the balances, both sides are agreed, then I am sure the accounts kept by me. I am very experienced, I am very efficient accountant, so my accounts give no mathematical error. It is arithmetically 100% correct. But arithmetical accuracy does not ensure the absolute accuracy of the books of account. But that I have already told you, but it will be taken up on some later date. Okay? Now we have got the summarized accounts, and that is known as trial balance. Trial means testing, balance means ledger balances. Why it is prepared? It is prepared to test the accuracy of the account state. When it is prepared? At the end of the period, accounting period. Okay? Then my next step. We have effected transaction, huge number of transactions all through the period. It may be 3 months, it may be 6 months, it may be the year. Actually, we take into account the yearly accounts. Okay? So now I have effected transaction. What for? What is the objective? We are keeping the accounts of our business. What for business? Business is meant for profit earning. Okay? That is creation of surplus. So my ultimate objective, why do we generalize? Why do we making the ledger accounts, preparing the ledger accounts? Why would I go for summarizing? I have only intention, and that is what? That is to know. That is to know what is the results of the transactions I have effected all through the year. जितना ट्रांजैक्शन हुए हैं उससे मेरा हेल्थ अच्छा हुआ कि नहीं, हम इतना खाए, इतना किए, इतना कुछ किए, मेरा हेल्थ अच्छा हुआ कि नहीं. Health means not my health, not मोटापा, but it is the मोटापा, it is the health of the business house. Okay, so how do you justify? I have started with some property, with some assets. No, the total assets what I have invested in my business at the flag end of the year. There must be the appreciation of my neat assets. If the appreciation is not there, it means your efforts have given you no fruits. Okay, and if there is any appreciation in your total assets, neat assets, then it is a blessings, and you have you have generated some amount of surplus, and that is known as regarded as profit. Okay, say I started with some assets and some liabilities, and then they say I started with assets of rupees 1 lakh and some other specified liability of 30,000. So I had neat assets of rupees 70,000. Now at the flag end of the year, my neat assets must be greater than X, and that X will be greater than rupees 70,000. So if it is the state, it means that I have generated profit, I have generated surplus, and if it is less than 20,000, it means, sorry friends, I have failed to generate funds, so I have affected loss. It is nothing but the deficiency. Okay, so whether it is deficiency is not our objective. So our objective is to find out the profit, is to earn profit. So we are optimistic, we always think positive, and I will try to find out the profit or loss, the profit and loss that has been generated in between during the period as a result of the transactions taken place. Okay, so this part of the part in purchase of accounting is known as ascertainment of results. Okay, and then I have already told you the results are ascertained. How we get the total sales. From sales we deduct the returns we have effected. So net return and net sales means net revenue generated within the organization. From that we deduct purchase expenses, and purchase, after deducting that we get the gross profit. From gross profit we deduct administrative expenses and selling and distribution expenses. We get the trading profit, and from trading profit we deduct to trading profit we add financial gains, and we deduct financial loss, and thereby we generate the net profit of the organization. This net profit is nothing but it is the appreciation of our neat assets. Okay, and so we have two parts. The profit. This profit is the results of the profit is the neat assets, and this profit, net profit, is a liability to the organization. Okay, how can it be? This is the very important question. The neat assets. You have invested capital, no friends? What is capital? You have started business with rupees 1 lakh, cash account limited capital. We follow the benevolent system. So what I am getting, I am seeing that cash is there. But why it is capital? Because this is the amount. This is the amount. Initially I have told you that a business has its own entity. A business should be the entity different from the entity of its owner. That day I told you, Akash Pansari has started a business of with 1 lakh. Mr. Akash Pansari is a person. Okay, and Messrs. Akash Pansari is the business house. So the business house has its own identity. I think I am getting it. Okay, Messrs. Business house. Now you are maintaining not the business accounts of Akash Pansari. You are maintaining the business of Messrs. Akash Pansari. Messrs. Akash Pansari. Messrs. means business house. So what is happening? Akash is invested. Akash is invested in his personal account. Akash is writing cash is going out, cash account credit, and for what purpose? Business account debit or Messrs. Akash Pansari account debit. Okay, but whenever you are maintaining the accounts of Messrs. Akash Pansari, what is happening? It is cash is coming in, and and Mr. Akash's capital account. Okay, so capital is a liability here, and when the capital now if the when you have invested 1 lakh and it is the capital, it is the liability of the organization, and that 1 lakh has generated fund. इन्होंने this 1 lakh अंडर दिए हैं 30,000 का, तो टोटल कितना हुआ 1,30,000. That is the total liability of the organization, and this 30,000 is an additional liability of Messrs. Akash Pansari, and it has this organization is liable to pay that amount to Mr. Akash Pansari. Clear? I think are you getting me right? Okay. Acha. So yesterday I shown you that here we prepared the balance sheet. On the balance sheet liability side, what we have shown? We have shown the different liability. What is liability? Liability, I have already told you. Liability is the claim to service. To the organization, liability is the claim to service, because I have to meet the services. I have to render the services. So Akash Pansari has given 1 lakh, and this 1 lakh has generated 100 rupees, another 30,000. So what is the total liability of the organization? The liability of the organization is to 1,30,000, and that is to be paid to Mr. Akash Pansari. So you define it. Try to differentiate Mr. Akash Pansari and Mrs. Akash Pansari. You are not recording the books of Mr. Akash Pansari, you are recording the book of Mrs. Akash Pansari. So what is happening in the business house? Cash is coming in, cash account, debit and capital. When it is, if Akash Pansari wants to close the business, Mrs. Akash Pansari is going to die, then it is paying how much? Cash, capital account debit, profit and loss account debit to cash, 1,30,000. Okay, so net profit is a part of the liability. Yesterday when we prepared balance sheet, what we did in the balance sheet, in the balance sheet side, in the balance sheet liability side, we have done add capital, add net profit. If any further capital is added, that has been to introduction of further capital or fresh investment, and we have deducted any amount we done for the business. Okay, that we have done, and some other liabilities are there. And in the asset side, we recorded different assets. So we have got the equality of the total assets and liability. But today I am taking up just for your practice and for your better understanding, I have taken up some ledger balances. Okay, and from these ledger balances, we will try to prepare trading and profit and loss account. Okay. This is basically for your purchase part. Okay, and tomorrow I will take up one problem on balancing, and after that I will conclude the accounting process issues, related issues, after giving that a comprehensive definition of the meaning of accounting. Okay, now take it. You see what is happening. We have purchase. How much? Purchase is 1,50,000. We have prepared simultaneously both the account, trading account and profit and loss account. What entries go to, what items go to profit trading account? Purchase related expenses. Okay, and administrative and sales related expenses go to profit and loss account. Now you see, we have purchase of 1,50,000. It will go to trading account. You see, in the trading account, what we have done, here we have recorded purchase 1,50,000. Here, now see sales. Sales is the income, and sales is always credit, so it is in the credit side. Okay, sales. Here, I think there should not be any doubt. Return outward. Return outward means you have purchased goods and you have the amount not accepted return. So purchase return. Purchase return, what is the effect? Purchase return reduces the total purchase amount by that amount. Okay. So net purchase we have found out. Purchase account debit. Sorry, to purchase, and after that we have deducted return. So purchase return from purchase return is deducted. So 1,50,000 minus 20,000. So net purchase is 1,30,000. Net purchase is 1,30,000. Then comes return inward. What is return inward? Return inward is regarded as sales return. Okay, sales return. So you effected sales, but some amount has been returned by the customer. How much they have returned? They have returned the goods amounting to 30,000. So 2,70,000 minus 30,000. So need sales is this much. Here, need sales is this much. 1,40,000. Then wages. What I have told you, wages is basically a manufacturing expense. But here, when we are not asked to prepare any manufacturing account, then wages should be treated as a trading expenses, okay? And it should go over here. Therefore, 2 wages. Okay, 2 wages. Then it is gone. Then comes salaries. Salaries is an office expenses, administrative expenses, and it should go to profit and loss account. So in profit and loss account, we have written salaries. Here. Then carriage inward. Carriage inward means carriage inward. You have purchased goods and you have brought the goods to your center. So from the center of purchase to your place. So it is known as carriage inward. Carriage inward means carriage or purchase. So it is purchase related expenses. So it will come in the debit side of the trading account. Then carriage outward. Carriage outward means carriage outward. That is, goods are going out. So it is carriage on sales. Okay. So it will come to profit and loss account. Carriage outward. Clear? Then duty and clearing charges. Duty and clearing charges. Now, what type of expenses it is? Duty. There are 2 types of duty. One is whenever you are bringing goods from some foreign state. Okay, duty and clearance. The merchandise, those which have come from the other states, that is so. It is in case of import. Okay, import means foreign purchase, and this expense is a purchase expenditure. Okay. Duty and clearance charges. Duty and clearing means the goods have come and to you, and you are making all the payments to get the delivery of the goods from the port authority to on your part. So that is purchase related. So now you see, now I am telling you one thing. There are 2 types of purchase. One is the inland purchase. There are 3 types of purchase. One is local purchase. When you are purchasing goods from your locality. Now you are purchasing from all India. In that case, transport is involved. And whenever you are purchasing from other foreign states, that is known as import. Okay. So purchase has got 3 dimensions. One is national purchase, or regional purchase, national purchase, or third one is import. Import is the purchase from foreign lands. Whenever you are purchasing goods from foreign lands, it needs making payment of duties and clearing charges in the dock. Okay, so that is, it is import will be treated as a light purchase. So it will come in the debit side of your account is a trading account, and duty and clearing charges should be debit. Duty and clearing charges. Then factory rate. Factory rate is a manufacturing expenses. Okay, but here we have not been asked to prepare any manufacturing account. So factory rate should be treated as a trading expenses. Factory rate. Then office rate. Office rate is an administrative expenses. So it will come over here as office rate. Then fuel and power. It is manufacturing expenses. But we have not been asked to prepare manufacturing account, so it should be in the trading account. Okay. Then comes traveling and convenience. Traveling and convenience is generally treated as an administrative expenses because your peon is going to different places for visiting, for making the documents or any other whatever be the activities. So traveling expenses is a administrative expenses. Okay, traveling expenses. Then gone. Now rates and taxes. I have already told you yesterday. Rate and taxes is a administrative expenses. It is in the profit and loss account. Now discount allowed. Interest receipt. Interest receipt is on income. Interest receipt will go to the credit side of profit and loss account. Okay. Discount allowed. Discount allowed is a financial loss. Okay, it is basically discount on purchase. And financial loss, it should be treated in the profit and loss account. So discount allowed. Then discount receipt is our gain. It will come in the credit side of profit and loss. So we credited it. Okay. Then insurance charges. Insurance charges is an administrative expenses, and it will be in the debit side of the profit and loss account. Bad debt. Yesterday I told you. Bad debt. Debt means debt, that is debtors. Okay. Whenever you are selling goods in cash account debit to sales. Whenever you are selling goods on credit, party account debit to sales. Okay. Now this party is not in a position to pay the amount. So this party will be credited, his account should be deleted. So party will be credited and bad debt should be debited. So bad debt is a financial loss, it should be on the debit side of the profit loss account. Bad debt. Insurance and bad debt. Trade expenses, general expenses, or it should be on the administrative expenses debit side. Advertisement, I have already told you, it is a selling expenses, so it will come over here. Next, depreciation. Depreciation is a loss. Depreciation means abocha. In Bengal it is not abocha. I am telling you, it is a loss of the assets due to use, due to wear and tear of the passage of time. Think it. You have purchased a machinery. You have purchased a machinery at 50,000. Now after running the machinery after 1 year, due to 1 year it has been exhausted, okay? To some extent it has been eroded. The value of the machine, the efficiency of the machine which it was at the opening date must not be same as at the closing date. Right? So there must be some loss. There must be some loss in the efficiency, loss in the efficiency of the asset. So it is because why? Because it has been used. Okay. So now you think here, you have purchased a computer and you have generally used the computer for a good number of days, 1 month to 1 year. Okay, now your computer today is not as efficient as it was in the date of installation. So during this period it has gone down. That loss is known as depreciation. This is used. So depreciation is, bear it in mind, depreciation is the loss in the value of asset due to use, number one. Number two, you have purchased a computer. Okay, and that computer, because of the some next gen computer, it has been obsolete. Okay, and it is of no value today. So it is lost due to passage of time. You think it. There are different types of mobile. We have got the last 30 years. Okay, many mobiles have gone out of date. They can work properly. They can work, but they are not so efficient as it should have been today. What type of material, what type of mobile we need today? It is of not that state. So it is brand new. You have, sir, ये बहुत अच्छा है sir, हम एकदम use नहीं किए, थोड़ा मोड़ा use किए, थोड़ा मोड़ा करो और नहीं करो, okay? but वो चलेगा नहीं गुरु, so it is lost because it is out of date. So it is a passage of time. So any depreciation is the loss in the value of assets, in the efficiency of the assets due to use, number one, and to passage of time. Clear? So the depreciation is a loss, and it should be in the profit and in the profit and loss. Depreciation on plant and depreciation on initiative. Now, next come, now you think, say I had the machinery of rupees 50,000 at the opening of the year. So now after running 1 year, I have seen that it has been depreciated by 10%. What is the loss? The loss is 5,000. So that is depreciation. Now, whenever you will be preparing the balance sheet, what will be the value of the machine? The original value was 150,000. Now it has affected loss of 5,000. So the net value of the machine will be 45,000. Okay. So bear it in mind. This is fantastic. Accountancy is a fantastic subject. Friends, if you go into the detail, all things are not being covered over here. I will cover gradually. But some other things, those who are in offline, please. Those who are online, you concentrate on up till this. And those who are offline, I will give much more things in the classes. Okay? And you must practice it in your house and minutely. Learn the subject minutely. Don't leave a page. Don't leave a particular segment. If you leave that, you will be disconnected. Okay? That's why huge number of commerce students you have been getting. Thousands, millions of students, commerce students are there. But most of them, sorry friend, I have seen, what is my experience is saying that they do not have that amount of conception of the subject. They can do solve some problem, but they cannot maintain such amount of rhythm in the subject. So my friends, it is my request, if you want to learn the accounting, not only the accounting, but any subject, give 100% in that. But in accounting, you must be 100% very, very minute. Why? Because if you lose one, then you will lose that topic. You will lose that track. Okay? Because accounting is a process. Okay? Mind it. आप खाना बना रहे हो, ठीक है, खाना में नमक देना एक पार्ट है, आप नमक नहीं दिए हैं, तो खाना जब होगा तो क्या होगा, बर्बादी होगा, ठीक है, so that is the thing, so you must be very, very serious. Now, friend, depreciation. Then stock, opening stock, 118, so it is 118, okay. Then opening stock will always come in the asset side, okay. So, sorry, I'm wrong. In the trading stock, opening stock is the amount of stock that I have used. Yesterday, in the last example, what I have shown you, in the statement of account, it was opening stock at purchase less return, less closing stock. Did I do that? I do that. Okay, I did that. So opening stock is, I have effective sales. What is one thing you please take into mind? The one I have not told, but here is the most important thing is that the process of accounting, process of ascertainment of profit is nothing but matching the cost against the revenue. Are you getting me? Matching the cost against the revenue. Yes, I have effected amount, I have generated amount, that is revenue. Revenue comes from sales, okay, and matching cost against revenue, that is deducting the cost from revenue, we get the profit. So the process of preparation of final accounts, that is trading and profit and loss account, is nothing but it is the process of matching cost against revenue. And by matching cost against revenue, we get the profit. That is the process of ascertainment of profit. Here, so opening stock, the goods I have sold. See, you think you are carrying on a business of hand, okay, ceiling fan. Now, this year you have purchased 500 fans. Okay, say, but you have sold 600 fans, 600 fans this year. How can it be? It means there might have been a open stock prevalent at the date of the beginning of the year. So I have sold this because 100 was in my stock. Okay, that stock is sold out. Now you think you have sold 550. What does it mean? I had 100, I purchased 500, then I had total stock of 600, but still I have sold out 550, so it means 50 is my closing balance. Okay, that is closing stock. So what I can, opening stock, at purchase, less closing stock we can do, or instead of that, we can write closing stock over here. And it is our practice when in our conventional. Later on, I will let you know many things, many modification in over here, but just for your and today's understanding, you take it as opening stock always debit something. What the student basically do, what the teachers help us to do, help the student. The teachers in present day, you will see no teacher is goes on giving the detail of the accounts to the students. What they do, you will see, you can check, the teachers give you a list of the expenses. This is, ये trading account में जाएगा, याद कर लो. ये फाइनल अकाउंट में जाएगा, याद कर लो. वो बैलेंस शीट में जाएगा, याद कर लो. तो ये याद का बात दूर है, याद तो जरूरी है, लेकिन याद से ज्यादा अच्छा इम्पोर्टेंट है क्या? समझना. ओके, तो ट्रेडिंग अकाउंट इज ए पार्ट relating the matching the trading, matching the purchase costs again sales. Now sale is total sale minus return, that is net sales, and here opening stock at purchase less closing stock. Instead of doing that, I have written opening stock over here, purchase over here, and closing stock over here. Okay, and it neutralizes it there. Then wages, carriage inward, duty and train charges, factory rent, fuel and power, all this. Then again here import, import if there is any import, that is foreign purchase will also come. Okay, any import duty always come, and any export will go over there. And if any export duty is the selling expenses, and it will come in the profit and loss. Clear? So that is our trading plan. What is the result? You see, it is 2,95,000, and in order to get it 2,95,000, we have got a balance, and that is the gross profit. Here, that part is done. Now this gross profit is brought down. Okay, over here 96,000. To that we have added interest receipt, financial gain. We have also received discount 460, and these are the different expenses: salaries, administrative expenses, carriage outward, selling expenses, office rent, administrative, traveling, administrative, rent and rates, administrative, discount around, financial gain, insurance charge, trading expenses you can consider it as an administrative expenses, but it has got some other nature that I will let you know later on. Bad debt, financial loss, trade expenses, administrative, advertisement, selling expenses, depreciation, administrative loss. But whenever we will be considering the detailed account, depreciation of plant will come to the manufacturing account. That I will let you know later on. But this is for your preliminaries, and from the difference between from gross profit and these income, we have deducted all these expenses, and we have got the net profit, and that is the net profit. Yesterday, what I did, this part was taken for other part, this part, that rate, and this comes up. Then those yesterday, what we did, we got the gross profit. From gross profit, we deducted administrative expenses and selling expenses, and we got trading profit, right? And this trading profit is balanced, and it is taken in over here, and here we have added the financial gain, and here we have deducted financial loss. Okay, but in your house, you please do one thing, you make that amount of modification of what I have done today. Clear? So that modification you make. So you make the alternative process of finding out the gross profit. Because we are getting how much water? We are getting gross profit, we are getting trading profit, and we are getting net profit. Here, what is that? We have got the gross profit and net profit. What do you cover? Because our space is very low, space is not sufficient, so I have done in that way. You do one thing, you segregate this part into two. Okay, profit and loss. Segregate the profit and loss into two parts. One is for trading profit and the other one is for net profit. Trading profit, how would I get? From gross profit, we deduct administrative expenses and selling expenses. You will get the gross profit. And net profit, trading profit. Trading profit will be carried over here, and here we will add financial loss, financial gain, and here we will add financial losses. And thus we will get the net profit. Clear? So that is up till today. Tomorrow I will give you some information, and we will prepare a balance sheet separately. Okay? Some information we will prepare the balance sheet, and also I will give you the more or less the concept. So the total process, I will give you a picture, a diagram of the total process of accounting. Okay, and also give you the comprehensive definition of accounting. Okay, thank you very much, friend. Be tuned with this subject. Be very serious. Be regular with my televisions. Go into the depth minutely, and again, if your queries, make comment, and I will help you.